All right, Vanguard Wellesley Fund. How did that sucker do over these last 18 years or something? Now we're getting into active management. This is where it gets exciting because we've looked at index funds all before, and you know me. I go towards the index fund route, generally speaking, because of lower cost. But there is a place for active management, and I think you'll see what I'm talking about here shortly. So we'll go to Wellesley, Wellington, the Franklin Income Fund, and then the American Funds Income Fund of America. Those are our big four when it comes to active management when you're taking money from the portfolio as well. If it's just accumulation, it's going to be tough to beat the index funds. No getting around that. But with that said, when it comes to decumulation, pulling assets out, there is a place for active, and we'll share with you here right now as I get my trusty PVC pike as my pointer. All right, so don't forget to subscribe down below. Thumbs up, comments always help me here at the Heritage Wealth Planning YouTube channel. So let's dive right into this. VWINX is the Vanguard Wellesley Fund. Wellesley, I'm not even sure how you pronounce it. I guess it's because it's a Wellesley, Massachusetts school. I don't know where it comes from. Wellington is where Jack Bogle got his started. Wellington Asset Management Group, the portfolio guys. I think they probably still do. They run the Wellington, the Wellesley. They ran the Vanguard Healthcare Fund, which a guy named Ed Owens ran meticulously for many, many, many years. I don't know if he still does or not. I just don't pay any attention. But Wellington Group out of Boston, that area, is where Bogle got his start and got the ability to start the first S&P 500. So Wellesley, just an impeccable track record. Just a wonderful fund. I mean, there's no getting around that. Don't take this for explicit recommendation. I don't know you. You don't know me other than, this crazy YouTube stuff, but it's going to be tough to beat Wellesley. Let's just put it that way, and you'll see what I'm talking about here. So start with $100,000 as is our want. We start in 2001 because, again, we're comparing this to I didn't even put my mic on, did I? Well, hopefully you can hear this. We're comparing this until the Vanguard, when the Vanguard Treasury Inflated Protected Securities Fund started. And we're looking at income that we can take essentially for the rest of our lives, starting in a down market. And lo and behold, Wellesley, other than pure bond funds, gave us our first green when we had stock exposure at all. That's fantastic. Now, the Vanguard Life Strategy Income Fund also gave us green, but the Vanguard Life Strategy Income Fund is 80% bonds, and the Wellesley is not. Off the top of my head, I can't remember the mix. The Wellesley, I think, is a bit more of the aggressive of the two. Let's take a look here. Is the Wellesley? You got Wellington, Wellesley. One is basically 60-40, one's 40-60. I can't remember which is which, so hold on just a second. What is the oops. Let's see. Hold on just a second, my friends. The Wellesley Income Fund. So there we go. Summary. All right, so we VWINX. I always forget which one has more stocks, which one has more bonds. So the Wellesley, the more conservative. All right, the Wellesley is a 30% stocks, 30% bonds to basically 30% to 50% stocks, 50% to 70% bonds. So basically, it's a 40-60 portfolio, if you will. 30-70, 30-40-60, even 50-50, depending on what the manager wants to do. And I am curious to see who the manager is now. Let's see, profile. I literally haven't looked at this fund in a long time. John Keogh is the lead manager since 2008. They're out of Valley Forge. Okay. I guess I know. I didn't know Vanguard owned it. I know they were part. I think they're part of Wellington. Yeah. Okay. There you go. Prior to joining Wellington Asset Management. Okay. Yeah. They're talking about Bogle there, or talking about Keogh. So it's interesting. So here's their new lead manager from February 2008. He used to be a fixed income portfolio manager. He's responsible for managing the investment grade fixed income portfolios. He's chair of fixed income review group, which reviews the firm's fixed income portfolios to ensure that they meet the client objectives. In addition, he serves as a CBO, collateralized bond obligation investment review group. Prior to joining Wellington Management in 1983, he worked at Connecticut National. Okay, Wellington. I didn't realize Wellington was in Valley Forge. I didn't realize they merged with Vanguard into Valley Forge. I'm okay. Well, I don't think they did. So did Wellesley not become? I don't know the history. Did Wellesley not become part of were they not part of Wellington Group? I don't know. But I do know Wellington is where Bogle got his start. I do know Wellington is also where the Wellington Fund is. I always thought Wellesley and Wellington were all both part of Wellington. So I'm confused. Either way, doesn't matter. Wellesley is through Vanguard, and Wellington is as well, the Wellington Fund. All right, so 2001, we are way up, 7% after taking, and then we took the 5369 out in 2002. We're still well above $100,000, my friends. That's fantastic. So we are still clocking in well above 100. In fact, look at that. We never dropped below 100 ever. Now, we did take a little bit on the cheeks here, on the chin here, 118 to 101. But we're still well above the market decline of any significance. I mean, that's not much. I mean, that's what I'm talking about. This is pretty impressive right here. I mean, I don't know how much they had stocks and bonds in here. I just don't know. They have the charter to go 30 to 50. 30% stocks to 50% bonds. They have the charter to do that. So I don't know what they had in this regard, but that's, literally, if you want to see a benefit of active management, theoretically, active managers, because you're paying a little bit more, should be able to get you a little bit more juice when the markets are getting crushed. But we have 1, 2, 3, 4 down markets over the last 17 years. Down to $1,000, and that's nothing. Down $2,000, that's nothing. Down $11,000, that's nothing. Down $5,000, that's nothing. So you can see we never reached 4,000 or 5,000. No, right here we're still above 5,000. Now we get up to 6,000, and we've never. I mean, look at that. I mean, now we're even at 7,000. So at the end of 2017. Vanguard Wellesley Fund is at $141 and $7,052 for income. That's what I'm talking about, my friends. That's exactly what I'm talking about here. I'm looking. I mean, we don't have hardly 22. Look at that. So at the end of the day, we took 102,251 out. We basically took as more than what we put in. And we have 141,000 to show for it at the end of some of the worst carnage that we've seen since the dawn of mankind. Now, again, these up years, I'm sure we didn't do as well. I mean, here's 2000. I mean, from 2017, we're up $7,000, or the markets were up, 29? I can't remember. But that is a moderating force without moderating so much that you're not getting an increasing income stream. That's what I'm talking about. That's what I want to see. And so going back to where I was telling you before, there could be a big surprise. This might be it. Now, we're going to look at Wellington, then we're going to look at the 2 other non-Vanguard funds as well. But, when it comes to this kind of stuff relative to kind of creating your own portfolio of stock index and then bond index or bond inflation protected fund, I don't know, man. I defer to this right here. Absolutely. But let's keep looking. We'll keep driving on and see what we come up with. So stay tuned. Thumbs up, comments always help. We'll see you guys next time. Don't forget to subscribe. Thanks now.